It's time now to focus on deeper issues around this finance bill. And joining me in studio is Alex Kanyi. He's a partner at HCD. Thank you very much indeed, Alex, for joining us.
Thank you.
Very good. And next to Alex, we have Robert Kamuara. He is a taxation lawyer. He's joining us tonight. Thank you very much indeed, Robert. First of all, I want to hear your sentiment. Today we were expecting Parliament to start debating this finance bill, and we wanted to hear so much about whether the sentiment that have been raised by members of the public were going to be captured in this debate. Unfortunately, it never happened. What were you looking forward for? And I would want to start with Robert.
Thank you. We're looking forward to seeing how the debate would go, especially on matters where it was going to be a balance on how they're going to debate on sensitive matters to do with capital gains, sensitive matters to do with the 20% that is required for you to place as a deposit before you can go ahead and put a matter at the tax appeal tribunal. Amongst many other issues that are being debated, including the issue of to do the housing levy.
What about you?
Well, I was looking for quite a heated debate today, going by sentiments from both sides of the government, and especially the MPs who are aligned to either side, and much around this contribution to the National Housing Fund, plus the 16% VAT on petroleum products. So I was expecting a lot to happen today.
And of course, we have heard it from President William Ruto and his deputy Rigathi Gachagua saying that they expect nothing less than a victory, from the floor of the House, which means that they have rallied their supporters in the House, or their members of Parliament in the House, to push through this bill. I want to hear from you, Alex. Which is the biggest challenge, or what is your bone of contention with this bill?
A couple of things. So first is to mention there are some things that are positive, which of course are not getting the attention that the media perhaps is giving to this finance bill. But there are also areas of contention that all of us have already had. So I'd mentioned the VAT on petroleum products, National Housing Fund contribution. We have issues to do with excise duty that is getting increased, especially for transfers being provided by telcos. Advertising, media stations will also be hit if we get the introduction of the 15% excise duty on advertising fees, just to mention but a few.
And one question that's now coming through is, Kenyans expect service delivery from the government. We expect roads to be constructed, hospitals to be built, schools to be built, teachers to be hired, and so much. Then how do we expect the government to finance this project?
Good question. Again, we are focusing on adding taxes or increasing taxes rather than focusing on the expenditure. So I think it's a good time we look at our budgets every year and how ambitious they are. We've heard that some of it is also budgeted towards wastage, and we've also, even today's news, we've had one of the MPs say if we were to collect taxes in a proper way, we would actually collect 2.9 trillion, meaning with the current tax measures that we have within our tax laws, we can actually collect the taxes. So why increase them now? If you are also admitting that you can actually tighten your belt, look at how we are spending our money, and make the money that is required to support budget.
But also, it's also good to recognize the fact that we're also having some tax reductions in some fronts. It's also good to be fair and to recognize that fact. I want to hear from you, Robert. You know, we have had, people saying that this document, this budget is, these proposals are unconstitutional. They have even gone some people are threatening to move to the Constitutional Court to bar the implementation of this document. And do they stand any chance of succeeding in that front?
The Constitution is clear in Article 22, subsection 1. Every citizen has a right as a fundamental freedom to challenge anything in a court of law which he feels, to the extent that it will infringe his rights, or may even he feels that it might infringe his rights, then he has a right to go to court. And no wonder reason why we have seen the lawyer of the people going to court to try and defend and fight against the bill that is in Parliament. Mm-hmm. So agreeable, anything is acceptable. Mm-hmm. Yes.
Do you see any success in that attempt?
Well, the matter is in court, so it might not be very fair to say whether it's success or not. Mm-hmm. But let's leave it to the courts and decide. But looking at previous cases that have been there, it is success. It can be successful.
Mm-hmm. And when you look at this whole document, the Finance Bill 2023, do you, from a legal eye, do you highlight or do you see any provision that contradicts the Constitution?
Yes, there's quite a number. As we started from the onset, we talked about access to justice. Mm-hmm. And access to justice, again, is a fundamental right. And when the tax bill puts a restriction to 20% as a deposit that you have to put, and that is only on one side, the taxpayer. The commissioner on this other side, the taxman is not asked to put down his commission or to put down his contribution or his 20%, then access to justice becomes difficult. A simple thing, if you want to put, if you have a claim against somebody on an unpaid bill, and you have to go to court to the extent of a tune of about 1 million shillings, most of the court fees would amount not more than 71,000 shillings. Ideally. But if you are to now have a tax liability, we're demonizing the tax liabilities because you're putting it to the tune of 20%, so you have to pay 200,000 shillings. Expand it further, if it was 1 billion shillings, how unfortunate it would be for you to access justice. So quite a number of sections of the constitutions are being infringed. However, there are canons of taxation that the tax bill needs to observe. It has observed to some extent things on equity, things on the economic, should be economical, there's certainty, and other things like convenience. So these are some of the things that the Constitution should also borrow from, the bill should borrow from when coming up with a bill.
And of course, those are some of the issues that we should be looking forward to in Parliament to see whether they are going to be captured. If you're just joining us, you're watching this conversation around the Finance Bill 2023. It was supposed to be debated in Parliament today. Unfortunately, it never happened, and so we're looking forward for this debate on Tuesday next week, and so we'll be able to see what is likely to change out of this bill. We want to take a break, and thereafter we'll be back with more conversation. Stay right here.
Kwa majina naitwa David Irene, nimetoka Mwiki. Lotomoto ni show iko sawa, ni kitu true. So na Kanyi wote mcheze Lotomoto.
Usisahau kucheza Lotomoto. Shinda milioni 2 kila siku kwenye M-Pesa. Chagua lipa na M-Pesa. Paybill number weka 757070. Account number andika neno Loto. Weka kiwango chochote cha pesa kuanzia shilingi 50 hadi 2,000. Lipa kisha subiri draw.
Established under the Unclaimed Financial Assets Act number 40 of 2011 to receive unclaimed financial assets from holders of such assets, the Unclaimed Financial Assets Authority has taken the responsibility of safeguarding these assets seriously and reunites the assets with their rightful owners.
How unclaimed assets become unclaimed is purely through passage of time. A defined time in law has passed, and the owner of this asset and the holder have lost touch.
We received a letter from a bank telling us that they have sent the proceeds of her account to Unclaimed Financial Assets Authority. So that's when the journey started.
Unclaimed Financial Assets Authority. Receive, safeguard, reunite.
Welcome back. You're watching us live from Broadcasting House. We continue our conversation on the proposed Finance Bill 2023 in the company of Alex Kanyi. He is a partner with Cliff Decker Hoffmeyer, if you like it, CDH, and Robert Kamuara, who is a taxation lawyer working with Kamuara Law and Company Advocates. We continue to look at the pros and cons of the finance bill. Before we went for the break, I had asked you about whether this bill, contravenes any constitutional provision, and you highlighted some of them, Robert. But I want to bring Alex into this conversation. You see, the bill also proposes to change the taxable band from the current 1 million to 50 million shillings to 500 to 15 million shillings for business entities. We know the government has been very keen to help the small, medium enterprises to grow and, of course, to access more funding. What is this provision likely to do to SMEs?
I guess this is also another provision which is a little bit not welcome, because I was speaking to someone yesterday who sells their shoes at the Kamkunji market. And this particular lady was telling me that they are struggling to meet their daily sales, which should be enough to cater for their needs. Basically, business has gone down. So it is at that point that the government is also increasing the turnover tax from 1% to 3%, and also lowering the threshold for turnover tax from 1 million to 500,000 shillings.
Yeah.
So I think it will be quite expensive to then do business, especially for the guys who the government is saying they want to promote, the hustlers and guys in the low income bracket. My proposal would have been perhaps they retain the same 1% and also retain the threshold to start from 1 million, at least to give these people some time to adjust. But just to give it some context, in 2020, we had the Tax Amendment Act, which then brought down the 3% to 1% for turnover tax. So it was just before COVID. So it was introduced by the government actually to cushion these small and medium traders from the tax. So this is a time they are reintroducing it, but the question is, have those businesses recovered? Are we in a better place post-COVID? The analysts will say we are not in a better place post-COVID, because we are still trying to kind of adjust to the shocks, others that have come after COVID. For example, Russia, Ukraine disrupted supply chains, etc.
Yeah. But we also agree to the fact that you still have so many medium and small companies that are without the tax band, but yet they're still making a lot of money, they're still making profit. And so how do you tap them? And this is one of the avenues of expanding the tax base.
Good thing, and I think the government is trying to do it in terms of collecting information from, if I want to get to know who I'm not taxing, say in the Gikomba market, I'm able to go to every stall, get to know who is trading, are they tax registered, and if they're not tax registered, ask why, bring the hard questions, and then try to bring them to the net. But connected to it is the government facilities that it can offer. For example, this person will want water, will want electricity. as I connect you to power, as I connect you to electricity, to water, I also want you to pay taxes, so that that conversation can be had, so that I'm able to convince this person who is perhaps in Gikomba that it is important that you pay taxes and you're not yet in the bracket, so that I'm able to also facilitate your business. So that's a conversation that I think this government should have. But it is a hard to tax sector, not just in Kenya, all over the world, and people are struggling to actually tax this particular sector.
I want to hear you, Kamuara. I mean, when you look at you know, the MSMEs in this country, what you're talking about, you know, they employ about 90% of the country's workforce, and their contribution to the economy is about 25% of our GDP. But majority of them, they are excluded from the tax bracket, and so when you have such a significant portion of the economy being left out of the tax bracket, then aren't you working detrimentally to economic principles?
I agree, and that's why we started by talking about the canon of equity. The canon of equity does not say that we should all pay the same amount of tax. What it says, the richer, or those who have a higher income, pay more tax than these others. So it can be made realistic, and it can be fairly done in a way that can ensure that the tax base is widened. And as it is, the government is trying through the finance bill that has been put forward. The legislators are supposed to debate and see how the tax net can be widened. That way then, it will even make it easier for those who are in the higher tax bracket to pay less. And you can see the most important thing is how the collection is done. There is the introduction of the electronic system, the way cash will be collected, the way the tax will be collected. That is another contentious issue that has come about. And if it is properly implemented in such a way that it is made easy for taxpayers, even those who are in Gikomba market, to submit their returns and make their taxes payable, then it will be economical for all to pay their taxes. And the poor, so-called, or the smaller institutions and smaller companies will not feel overstretched when it comes to taxation.
And see, the riddle has always been, I mean, in a country where you have more than 22 million voters, and then you have about 2.5 million taxpayers, that is completely unfair. And so what then other tricks are you supposed to use, or is the government supposed to use, to bring this number to maybe around 10 million? Because if we were to grow this number, you can be guaranteed that even our borrowing habits will definitely drop. Alex?
Yeah, certainly. But like I said, this is quite a hard to tax sector if you don't have data of who is trading where. But government has a lot of data, as it were, today. We had a program for Huduma cards. We had program, you know, we had the census. Government has various agencies, not just KRA. You have, you know, guys from NIS. You have guys in the water companies and the power companies. There's a lot of information that can be harnessed by the government to then connect the dots to say, how come, for example, we have this data that you're paying school fees for your child in this high-end school, yet we don't see any taxes? How comes we have data that you're paying this much in terms of power bills, meaning you're actually consuming a lot of it, but you don't pay taxes? How comes you, within even KRA and NTSA, you drive this huge car, it's registered in your name, but when we look at the data from a tax side, we don't see you. So I think it's just a matter of harnessing the information that the government already has to connect the dots, ensure that everyone is paying their fair share of taxes.
But you know, you also have a situation whereby, you know, analysts also say that you know, one of the challenges that we are facing as a country is tax avoidance as opposed to tax evasion. Do you agree with them? And then how do you deal with this malady?
In itself, tax avoidance is not an offense, so to speak, as it is, you would say, tax evading, because tax evading is where you literally run away from paying tax. But when you have smart skills of managing your taxes, that way then it encourages businesses to ensure that they can be able to pay less tax or pay friendly tax. Let me just make it practical. An institution or a company that decides to go and invest out of town in the counties that have been recognized by KRA as allowable sections, out of town sections, then you pay taxes at you're given refunds to the tune of 150% on your capital deductions. That's a way of ensuring that you do some tax savings. And small institutions can try and harness their businesses and try and reach out of the Nairobi counties so that they can be able to save on taxes. So tax avoidance measures can also be taken to ensure that we are encouraged to pay more taxes and come into the tax net, because the main thing is widening the tax base.
Very good. Well, my producer is telling me that we need to wind up this conversation, but I want to give you, Alex, 30 seconds to tell us. So, after Tuesday, what happens next? Because we know the budget presentation will be done on Thursday next week.
Well, after Tuesday, expect, of course, certain provisions to come to force from the 1st of July, depending on how the House votes on this particular bill. We've done some analysis before as a firm to just check some of the things that are introduced on the floor of the House. So we should check out for some of the things that could be introduced on the floor of the House. And finally, it's just to encourage taxpayers to be ready for this, because the way it appears, maybe a majority of this will just pass through. So get ready to be compliant, and maybe just to encourage also the government to check expenditure so that we don't have to tax every other time. And finally, of course, there are positive things within the bill, so it's not just all evil.
Absolutely. Kamuara, I also want to hear from you in 30 seconds. I mean, we were accustomed to a situation whereby the finance bill comes immediately after the budget speech, but this time around it came earlier. How did this change?
Well, for purposes of public participation,
very well.
That's the reason why it was now not to be a custom, just to be read. So public are invited, and even at this forum we're doing public participation.
Very good.
And as my colleague puts it, a budget has got both sides, the expenditure, the incomes and the expenditures. Let us also look at how the expenditures are done. Let's debate around it so that we can ensure that at the end of the day we have a surplus and not a deficit, as it is always being said. Very good.
Gentlemen, thank you very much indeed for finding time to be with us this evening, and of course for allowing us to tap into your wealth of experience. Your time is highly appreciated. Robert Kamuara is a taxation lawyer working with Kamuara Law and Company Advocates, and Alex Kanyi is also a partner at Cliff Decker Hoffmeyer, joining us this evening.